First, let's look at the US stock market. I'll mainly discuss it from a technical perspective. I've talked about the fundamentals before, and I hope to create more valuable content. I hope this can help everyone make more money in the market. So if you don't want to miss my future content, remember to subscribe to my YouTube channel and click the bell next to it. That way you can make sure you receive every video instantly. Last week, the S&P on Wednesday, there was a sharp drop in the first 2 days, and it seemed like the US stock market had broken down. The price at the top didn't keep surging. We saw a significant drop on October 31st, the last trading day of the month, and this decline, actually, you can see that it still hasn't broken through a key price level, so it's still looking pretty good. The price is still trending upwards. Last week, I drew a chart for everyone, and I thought there was a chance it would form this consolidation pattern and then continue to break upwards. So last week's drop, this step was actually nothing major and hasn't damaged the upward trend at all. We expect there's still a chance for a pullback, but at most it will just test the trend. If this pattern is moving upwards, it won't be a major correction. This aligns with our current thinking, plus the fundamentals suggest a long-term upward trend. At most, it might drop to 6,820 points here. This is a consolidation pattern, and then it will continue to break new highs. This is our support for the US stock market. In the short term, if it looks back at 6,806 points and breaks through, it should move upward. So for now, we will pay attention to some key observations. There are also many stocks with catalysts. As for the broader market, we remain optimistic about the US stock market and for Hong Kong stocks as well. With so many holidays, it's also a rather dull and stuffy situation. It keeps moving within a range without any particular trend. From what we see, we still think it's a sideways range-bound pattern for now. No matter if you look at the weekly chart, you don't see a major direction, and that's the key point. In fact, it has already touched the 25-day moving average and this trend's low point. It's about to There will be a chance for a reversal and a direction will definitely emerge. Once it breaks out, we just need to follow the direction. Let's look at the monthly chart. The Hang Seng index might not have finished falling yet because there's a chance it will test 24,600. Only then will it surge upward. Actually, this has been a pretty strong support level many times in the past. It's still a bit short of that level and hasn't reached it yet. In the past, there was also a 9-turn signal and a 3-month pullback. So when it comes to positioning in the Hang Seng index, everyone should be a bit more cautious for greater accuracy. If we consider the macro environment, including the current rate cutting cycle, it's also about China's policies. There are also a lot of policies supporting the stock market. In addition, this is also a period of monetary easing. So from a macro perspective, we are looking upward here. However, there will be some fluctuations in the middle, some short-term volatility, which will create certain opportunities. We've already shared with everyone what to buy. In the past 2 weeks, we've shared our list with our student friends group, what Hong Kong and US stocks we might buy. We've already discussed this with our student friends, so next we'll also be looking for opportunities. Follow the plan, be ready with cash, and also hold on to stocks to position ourselves for 2026. So later on, we'll also talk about some opportunities to keep an eye on. First, let's talk about Tesla. Over the past few weeks, we've been sharing about Tesla with everyone. Most of what we've discussed has been about Tesla. Recently, Tesla experienced a pullback due to the overall market. But before we talk about the stock price, I also want to mention that Tesla is one of the stocks we'll be focusing on for major deployment next year. What's the reason for that? Because in 2026, Tesla will have a lot of catalysts for its stock price. They will have a huge impact. Catalysts that will affect it are about to emerge. All of these are positive influences, mainly in 3 key areas. Because Tesla used to be an electric vehicle company, and its valuation was driven by being an EV company. Tesla is going to transform into an AI application company, a real-world AI application company. This is what we are watching. We are mainly looking at 3 things. The first is in the area of autonomous driving. In the next 2 to 6 years, FSD, full self-driving features, will continue to be rolled out. After FSD is made available, it will become a paid feature. This shift from selling cars to charging for software will further boost Tesla's valuation, potentially leading to a repricing of the company, and its gross margin will increase significantly. Second, in terms of autonomous driving, robotaxi is about to go into mass production, as is Cybercab. Right now, many Model Y vehicles have already been piloted and have been operating for several weeks. The driverless Model Y has already succeeded, which is why the stock price has recently soared. The next step in the plan is to mass produce the Cybercab, which will then replace all Model Y vehicles. Then, in different cities, they will continue to implement autonomous driving. This is what they will do next if it succeeds. There is a 1.5% chance that this could be a catalyst to push the stock price higher. In terms of autonomous driving and vehicles, the second important thing is mass production. Mass production is also very important because for now, there isn't a single autonomous vehicle company that can achieve this. When it comes to large scale mass production, we've seen this in the past with Tesla's Model Y and Model 3. But in terms of factories, they have managed to achieve highly efficient mass production. I believe Cybercap will achieve the same, so everyone should pay attention to the second point. In terms of robotics and AI business, by 2025, it will already be in mass production. Robots within their own companies are already replacing some human jobs. In 2026, the second step will be to go beyond their own applications, mass producing robots, and collaborating with different companies to provide them with their robots. As you know, Trump issued an executive order at the end of 2025 indicating significant policy support for the development of the robotics industry. This is a boost to the market. Looking at the entire robotics sector, whether in Hong Kong or the US, it's, as we shared before, the launch of Tesla's energy storage business is a crucial catalyst for the future. While other energy storage businesses are also experiencing continuous growth, I believe that's not enough. SpaceX is another catalyst as its IPO will create an emotional catalyst pushing Tesla's stock price higher. These are all key catalysts driving Tesla's stock price over the next 26 years. Recently, Tesla has given us another good opportunity to sell in stages, as I've noticed its stock price has recently fallen significantly from $493 to $405. So, what about Tesla itself? We previously shared with everyone the positions where we bought in. Roughly after these two positions, we also made some deployments around $429. Then we kept moving our stop loss up step by step, and after that, it actually broke through the previous high. After we bought at those prices above $480, we moved up our take profit stop to around $480, and as soon as it was triggered, the price immediately dropped by 4%. Now, it's a relatively deep pullback. Many friends are asking whether it's a good time to buy Tesla now. From a technical perspective, right now, Tesla still hasn't touched the nearest support level. We see the support level as the 57-day moving average line. At the same time, this area is also a high volume trading zone where the stock price has repeatedly fallen in the past, accumulating a lot of trades here. So I expect that at $442, there will be a relatively strong support here, so everyone can pay attention to this level in the short term. The nearest support level will be this one, and then we look at $426 as the final barrier. We would then look at the bottom of this trend, which is a more conservative support level. If you can buy at this level, it would be equivalent to buying at those positions back on November 10th. So I think this round of pullback is exactly a discounted opportunity to capture the upcoming catalysts. If these really materialize, then these would be excellent buying points. If you believe in Tesla's technology and trust its ecosystem, then these are quite attractive positions. So I myself am also getting ready because previously at these levels, I had significantly reduced my heavy positions. So for me, this is also an adjustment at the end of the year. I'm quite happy to be able to buy back in at these levels. But I think the key opportunity for long-term positioning is at $422. These levels are ones where I would accumulate a bit closer in. If you want to try for a rebound, I would be watching the $442 level, looking further down around $429 and $442. These are the levels along this trend that I will be paying attention to. So for Tesla, in the short term, I would say don't try to catch the fade out just yet. Wait until it stabilizes. If there's a rebound or some support, for example, it dipped here before, I would tend to start scaling in around here on the right side of $402. You can enter here and then enter again here. Both are fine. That is, you can enter here, and if it really moves to the right side, you just keep adding. If it breaks down, then you wait, cut your losses when it breaks, and then buy again here. This approach is more suitable for the average person when trading. It tends to be much safer this way. Apart from trading the underlying stock, we can also look at options on Tesla because it's a relatively volatile company that we really like. If you've been following my live streams or my strategy style, you'll know that I really like it using Tesla to do some option strategies like short puts because I don't need to watch the market every day. I can still profit from Tesla's volatility. If you want to trade Tesla, maybe some of you don't know how to make money or how to use options to earn steadily. That's because I usually use some mild strategies, ones that don't require constantly watching the market. So, what other strategies do I use? It's the short put. Let me briefly explain what a short put is. Simply put, I collect a premium in exchange for agreeing to buy a stock at a certain strike price, meaning I have the opportunity to buy the stock. So if I sell a short put, if I sell this put option, then I can just wait for Tesla to drop to $430. If it does not fall below that price, then I can collect a $15 premium per share. So for 100 shares, that's $1,500 USD. If Tesla doesn't fall below $430, I get to keep the $1,500 premium. And this contract lasts for 29 or 30 days. So if it doesn't drop below that price within 30 days, I can earn a 3% return in interest. Simply put, I'm buying what's called a bet contract. You can think of it this way. I'm selling a bet contract, making a bet with someone else. If it doesn't fall below the price, I can earn 3% a month. Over a year, that's 36%. Isn't that incredible? Wow. Playing Tesla's covered call can earn you 36%. And why is that possible? Because recently the stock price has dropped a lot and the volatility is high, so the annualized return can reach 36%. Why is this annualized return possible? That's the reason. And as for why I just chose 403, why did I pick that strike price? Why would I want to take delivery at 403? It turns out it's because the trend's low point is $430. I've already calculated that it will return to $430. Because the bottom of this trend is around $430, I'm essentially passively locking in that price to buy 100 shares of Tesla at $430. If I can't buy them, I'll pay $3.60. If I do, I'll use a super good price to buy in. This is the option strategy I like to use. Of course, this is a simplified version. If you don't understand, don't worry, we'll have a free sharing session later to provide some teaching on how to use options to collect premiums. But if you want to be more stable, because option short puts offer different price options, you can choose $430 or a cheaper entry point. You can buy Tesla at $415 or passively buy at $410, where you'll collect 2.4% interest. Since you're choosing a lower entry price, your interest will be lower, but over a year it will be 28%, which is a very profitable method. I really like this method when you want to buy during a pullback. Of course, this tutorial isn't telling you to immediately aim for 36%. Actually, that's not high for Tesla. In the past, if the price dropped sharply, you could collect 40 to 50% a year, and there was a chance. Now the price has dropped by 1%, minus 2%, so its yield will be lower, but sometimes it can reach 50% a year. So it depends on the technical level. We will update this in our teaching. Everyone, the decline hasn't ended yet, so when it ends, it might reach 40%. So if you're interested, you can learn more. I have a link. If you want to learn about options, you can sign up. We're not talking about Tesla today. We shared it last time. This live broadcast was about 2 or 3 weeks ago. We shared that there was a chance to break through the $435 stock price, and it rose to over $480. When the price pulled back, I heavily concentrated my positions in Tesla. Previously, when I mentioned that we heavily concentrated our positions, I was actually referring to a long time ago when we went heavy at the bottom of the trend. We also reduced our positions and rebalanced at higher levels. So our past sharing has actually helped quite a few students and friends to profit, and many online followers have also witnessed the Tesla short put strategy I just mentioned. As you can see, it has been very stable, helping me make money whether the price was rising or falling during this recent uptrend or pullback without needing to worry about the direction. So, as I mentioned earlier, if you want to learn this set of option strategies and hope to earn stable rental income returns during stock price fluctuations, aiming for a 40% annual return with a rental strategy, and also want some short-term trading strategies that can yield over 8% in a short period combined with technical analysis, how can options help you achieve this? Anyone interested can scan this QR code to sign up and participate. We will have a sharing session this Sunday, and this session is not just a one-way talk. Because if you become one of our students or members, we actually have a real trading account, a rental income portfolio. This is provided to everyone for teaching purposes. You will know what shop hoods I bought, what option portfolios I have. In fact, we regularly provide updates about these real accounts on YouTube, as you call them. The winning probability is 80%, and it's actually a very low risk approach. I don't think there will be any blowups. It's very conservative with absolutely no leverage or anything like that. Even if there is a blowup, it would be from buying stocks at extremely good prices, which in the long run will earn even more. That is, if I end up holding the stocks based on my data and calculations, it's at a good entry point. Only when holding good stocks for the long term would I do this. So you will always get updates on this portfolio. If you want to know which stocks we have traded, you can always ask. By attending this sharing session, you'll have the opportunity to learn about this portfolio. Besides achieving it myself, my goal is to help everyone accomplish this as well. That's why our educational sharing has enabled many friends to use options to earn stable returns. For example, this friend earned over 200,000 in option premiums from selling puts in just 1 or 2 weeks. He achieved this in October, and in November, he made over 120,000 in profit. These are all real examples, and some friends have shared them with me. How can you use options to earn steady rental income and learn how to do it slowly and safely? So if you're interested, you can sign up. In addition, we have a stock sharing session. Later, we will share more about the fundamentals of some stocks. I will talk about how this 2026 sharing will be completely revamped. For every session I hold, there will be new content added because this sharing will be held regularly, and whenever I come up with something new, I will update it. Here, I will share how I choose companies, how I trade, and how I screen stocks and sectors. I hope to help everyone capture investment opportunities in 2026. I will also reveal some of the multi-bagger opportunities that I am optimistic about for the long term, and later I will talk about one of these companies. Some of them are included. That's right. Of course, besides sharing some stocks publicly, I will also teach you. I will teach everyone how to seize high certainty opportunities, how to diversify your portfolio, how to set strategies, how to set stop losses, and so on. So, if you are interested and want to improve your returns, you can sign up for this sharing session. Those who have done well, if you look at the past, these are friends who attended our sharing session last year. Many of them achieved seven-figure profits, and quite a few managed to do so. So everyone, remember to sign up. If you're interested, you can register for it. These are our recent sharing sessions. All right, next, I will share a few companies that I think are worth paying attention to. In the coming year, there will be potential for growth. First of all, the first company, I want to start by talking about Kuaiqing. Kuaiqing. I rarely mention this company because the companies I usually focus on are AI related. But recently, when thinking about the internet sector, I thought of a company, especially since I know a lot of friends have been enjoying traveling lately. The Christmas trend is very strong, and travel is both a long term catalyst and a short term one as well. Looking ahead, the long holidays in 2026, like the Spring Festival, will also have a significant impact. Domestic or local travel will also see substantial growth. In addition, there have been recent policies from the mainland. It has also been stated that China's policy is to expand domestic demand and investment. And Trip.com is also a beneficiary of domestic demand stocks, so it is also a leading company. Therefore, we believe that there are catalysts for future growth. In addition, another factor is that AI has made Trip.com's efficiency even higher. It can now recommend certain itineraries to users and make suggestions based on their habits. It can also effectively recommend a wide array of excellent hotels and fascinating tourist attractions to its valued users. So, here, I firmly believe that as a prominent company with the absolute largest number of dedicated users and with numerous strategic partners operating under its expansive umbrella, we think there is a high chance it will also benefit like 9961. Actually, why do we think its chart looks good? Because recently you can see its stock price is also in an upward trend. We can see that since its sharp drop in April 2025, it has remained relatively strong and has been moving along the blue line. It's in an upward trend. It seems to be brewing for the next wave of a brand new rally. Because recently, from November to December 24th, it has been rising while the Hang Seng Index has been falling. It went up by 8%. It's just that recently there has been a round of pullback and it's returned to a key level. Around 540 to 550 yuan, this area is quite a good support level, assuming that it continues to follow this trend because in the past it has been moving along very well. There's a chance it could break through this descending trend line. If it manages to break through the top of the downtrend, even if only briefly, there will be a wave of upward movement, a surge in price. Plus, as I mentioned earlier, the Spring Festival acts as a catalyst, so there's a chance it hasn't started moving yet, and trading volume is still sluggish. So, if there are some fluctuations with prices consolidating and then a breakout with high trading volume, there's potential in the short term, and it's also fine in the long term. Another point is that you can see this year they've made a lot of money. PE has dropped tenfold, which is even more impressive than last year. In other words, their income has multiplied. However, recently you need to pay attention to why the stock price has dropped. It's because they announced a tourism partnership with Cambodia and people are worried they might have sold data. So why has the stock price dropped so much and remained so sluggish recently? This is the reason. But in the medium to long term, I think this may not be such a big deal. The impact is only temporary. So you need to set a stop loss level. In the short term for the stock price, we should set a stop loss at 547 yuan. Use this level as your stop loss so you know exactly how much you could lose. Right now, the price is already close to this level. If you buy at this level and the stock price doesn't turn out as bad as expected, there could actually be a chance for a strong rebound. Also, returning to this level means it's back to a previous resistance zone. So this level has multiple layers of resistance, which is why I'll be paying attention to it. Besides that, if the stock price really can't hold this level and breaks through, I'll keep an eye on it and continue to watch. I'll be watching the 510 level because for this company, I'm not looking at short-term moves, but rather at long-term catalysts. You'll see that it has gone up for 4 consecutive years. Last year, it rose only a little, just 3%. The year before, it went up 95%. Before that, it was 43% and 1%. So there's a chance that in 2026, I think as tourism recovers, there could be a catch-up rally. So everyone can pay attention to this. All right, after talking about SJM, let's talk about two companies, Google, Tencent, and also the Hong Kong Stock Exchange. Let's start with them. So the first company I have a long-term positive outlook on is Google. Why is that? First, it has a comprehensive AI strategy with cloud services, large models, and a vast amount of data. Users including YouTube, Android, Google search engine, and then there's Google Drive and so on. All of these, they are all integrated for users and all the products are interconnected and can be called upon together, which is very powerful. Plus it has strong cash flow and no debt. That's also why Buffett would choose to invest in it. So Google is a company we are optimistic about, as we mentioned last time. And in terms of the stock price chart, we also see that recently, as we just analyzed, the US stock market has dropped sharply. But Google has actually been consolidating within this downward trend channel, while you can see the SPX plunging straight down. It is able to hold its ground, and in the short term, it actually has explosive momentum. Because the overall market affects stock prices by about 30 to 40%, it can ignore the market's decline, and it can also move sideways. These are stocks that just won't fall, and if they do drop, they're worth accumulating. So I am optimistic about Google, especially seeing how strong it is. In fact, once it breaks out, we potentially have a 4% upside to look forward to. That's in the short term. As for the medium to long term, I expect it could replicate the double-digit gains of the past 3 years. There's a high chance it will repeat that performance. It's possible that this year will be even stronger than last year or even stronger than previous years. So, of course, you still need to maintain proper management. Even if we're optimistic about a company in the long run, we still need to keep monitoring it constantly. We have to see if its fundamentals have changed because the competition in AI is also very intense. At this very moment in time, its current strength and overall capability are right here. But is it truly possible that some other prominent companies might eventually surpass it in the foreseeable future? There's certainly an undeniable element of significant uncertainty here. However, at this precise moment, and based on our thorough and comprehensive assessment of artificial intelligence, companies that have laid out a full industry chain currently have a very high chance of winning. So for now, we remain optimistic. I personally am as well. Previously, I had already allocated part of my position to Google. Now we're just waiting for a breakout to take profits. So we'll be keeping an eye on this. Of course, this is not investment advice. We're simply sharing our own perspectives. This is just my sharing what I do myself. When it comes to trading and investing, I like to share my experiences with everyone. All right, after talking about Google, let's move on to another AI giant from China. I mentioned Alibaba before. It also has a full industry chain layout. Today, let's talk about Tencent. In terms of Tencent's stock price, it hasn't risen much recently or even over the past year. The reason is that its investment in AI infrastructure is much less than Alibaba's, significantly less. Among Chinese companies, it's one of those that has invested the least. But does that mean it has no potential? It hasn't invested in the AI economy, but does that mean it has no potential? No, because it controls the most powerful application. Tencent in China also has a monopoly in the gaming sector. That's Tencent, that's WeChat. Actually, it's all about advertising. WeChat is a tool used by a lot of people. It's a market tool. Many small businesses use some of Tencent's services. For example, restaurants, micro shops, and so on all use their services. Plus, there's WeChat Pay and so on, cloud services. In fact, all these AIs will drive its growth and help reduce its business costs. When developing games, it can use AI for drawing and game development. Everything is possible. It can also use AI to target customers with advertising more precisely, thus reducing advertising costs. In the area of fintech cloud services, they can also provide AI services to some users. So this is something that will continue to grow. And recently, we've seen their latest deployment in intelligent agents. On December 17th, they hired a former OpenAI researcher named Yao Shunyu. He then began developing his very own unique system, but since language itself is inherently intangible and abstract, we can clearly see what's undoubtedly coming next in this fascinating progression. Tencent will likely focus on this area next year, specifically on AI agents. They mentioned conducting research on intelligent agents. So in this regard, we also believe Tencent has tremendous potential. As for valuation, major institutions have already done some valuation assessments for them. You can see that under different scenarios, there are various valuation ranges. The most optimistic is 846 Hong Kong dollars, and the less optimistic, okay, the base case is 700. And this refers to the worst case scenario, which is 541 Hong Kong dollars. This valuation was done about 2 or 3 months ago. If Tencent really develops AI, I believe this valuation is likely underestimated. Okay, $541 is undervalued. Right now, the stock price is in the low 600s, around $599. So it's actually considered relatively cheap in terms of valuation. Yes, so the current valuation is low at $599. And in terms of trend, that's right. Why are Hong Kong stocks performing poorly? Because the overall market is weak. Okay, and for now, this is actually a fair price right at this level. If it stays at $541, this level is actually just right. It's also the so-called 220-day moving average, which is the bull-bear dividing line. For Tencent, this is the bull-bear dividing line. Okay, and considering that Hong Kong stocks still have a chance of experiencing one final drop, it's okay. If it really plunges around these levels, I think this is the most precise buying point. Okay, of course, another way to buy is to wait for a breakout from this downtrend. Because right now, if you're thinking about entering at this moment, I'd say don't expect the price to surge right after you buy. Yes, you should expect to buy in batches so you can accumulate shares. That's the way to do it. Or because for now, it hasn't bottomed out yet, technically speaking. The uptrend still hasn't been confirmed, so it's possible it could continue to consolidate down to the level I mentioned earlier. So what you need to think about is how to split your entries. If you're holding a long position, how to allocate your buys in stages. For short positions, you should wait for a breakout above this trend before taking action. So this is my trading approach or my criteria for buying Tencent. Okay? And there's also a third method, which is what I'm currently doing for those of you who are holding stocks. If you want to collect premium, if you want to earn option premiums, then I use options to do that. Let me show you the numbers. Right now, for Tencent and Tesla, I'm selling some short puts to take delivery of the stock through options. Okay, for example, some of them have been assigned like at $620, which I really wanted to get. But for this one, I did not get assigned at this strike. So I will use it to do a covered call, letting it move sideways while I hold it. I just keep collecting the premiums, okay? Just keep collecting the premiums and grinding out the time value like this. So for small positions, I'll do it this way. If it really drops to these levels, then I can take on a bigger position. Okay, at these levels, that's the plan. So everyone really, it's important to be prepared on both fronts. This is really a matter of position control, okay? So if you want to learn more, feel free to sign up for my upcoming free sharing session. I'll be talking more about this. And also, what are some methods for scaling in your positions? Okay, so why don't we, to wrap up, talk about HKEX? So why talk about HKEX? Well, HKEX is a bit special as a company because HKEX, it has already tested the 220-day moving average. It's quite possible that this point is already a key buying opportunity because HKEX has actually been in a downtrend all along. But now, after it dropped to the 220-day moving average and even triggered a TD sequential 9, okay, the 220-day moving average for our strategy is considered a medium to long-term bull-bear dividing line. Once the company, when it touches the 220-day moving average, there's a chance it could be a good buying point, okay? You can see that the last time HKEX, let me explain why I used the 220-day moving average when it just touched $277. It immediately shot up. This line is something I personally tuned. Previously, when it dropped to this level, it also just touched it and then rebounded. This is a moving average line that I personally adjusted. And you can see that once it breaks above the 220-day line, it immediately surges. So from the perspective of the daily chart, it has worked several times. Right, so it touched it again recently, which is why I wanted to mention that there's a chance the correction might be over. For HKEX, of course, what we're seeing now is that it still hasn't broken through this downtrend yet, the downtrend from October to December. So we think it's okay to wait a bit longer, let it consolidate here first. Once it's done consolidating, and if there's a breakout at this level, that would be a great entry point. So if HKEX breaks out at this level, that's good. And this, yes, this right here would be an ideal selling point. For your stop loss, you can set it a bit lower, maybe around 2%. At least that way, you know if you lose, it's just a small loss. But if you win, the potential upside is much greater. So that's how I see HKEX. This is from the daily chart perspective, which is both medium and long term, of course. Okay. A less likely scenario would be if it breaks below the 220-day moving average. If it does break below, then things get a bit more troublesome because breaking the 220-day moving average could mean it might consolidate for a longer period, right? But if we look at it from a fundamental bull market perspective, it really shouldn't break below. At most, it might test the 220-day moving average one more time. That's all. There's a chance it could test it again. So you can keep an eye on it. As for HKEX, that's all clear. If you're interested in learning the full set of strategies, remember to sign up for my upcoming free sharing session this Sunday. Hope to see you all there, okay?